Good morning. Welcome to Sasakawa Peace Foundation USA Policy Briefing Series. I am delighted to see so many people attending today's event. I am Satohiro Akimoto, President and Chairman of Sasakawa Peace Foundation USA, or Sasakawa USA. Thank you very much for joining. Sasakawa USA is a nonpartisan 501c3 organization dedicated to deepening the understanding of and strengthening the relationship between the US and Japan, mainly in the Asia-Pacific context, for the good of free and open international community. Before we begin the event, let me quickly go over meeting protocol. Today's event is on the record. We will put the link on the Sasakawa webpage later. How do you change the view? Please manually switch between the views using gallery button. How to ask questions? Please use raise hand button at the bottom of the participant list. Today's topic is central bank digital currency. Lots of attention has been given to Cbdc because of rapid digitalization of all aspects of our lives and wide range of implications Cbdc will have on financial and monetary systems, both international and domestic. Because of its importance, Central Bank Group and the BIS established a working group early this year and issued a report identifying foundational principles and core features regarding the introduction of Cbdc. The United States was not originally a member of the working group, but later it joined the group. It is my distinct pleasure to introduce our esteemed speakers who are experts on Cbdc from both the United States and Japan. Dr. Dohner is a non-resident senior fellow at the Atlantic Council. He has held several important positions at the Department of the Treasury, including Chief Economist for International Affairs and Deputy Assistant Secretary for Asia. He played an important role in leading the department's policies regarding Asia, such as creating US-China strategic economic dialogue and subsequent negotiations with China. With regard to Japan, he represented the Treasury at the US Embassy in Tokyo from 1997 to 2002. He also worked with OECD in Paris and Monetary Authority in Singapore as a scholar. Dr. Dohner will talk about US views on the Cbdc and US-Japan cooperation on the subject matter. Minister Ichiro Oishi is a Minister of Finance at the Embassy of Japan in Washington. He is one of the most international officials at the Finance Ministry whom I know, working at the ministries and multilateral institutions, dealing with international finance, foreign exchange policy, international tax policy. He's a veteran of Washington, serving here 3 times at the IMF, IDB, and now at the embassy. Minister Oishi will talk briefly about the Japanese views on Cbdc. Mr. Yasuhiro Yamai is a managing director of corporate planning at MUFG, or Mitsubishi UFJ Financial Group. Mr. Yamai has been leading the financial group's strategic initiatives regarding regulatory and monetary development, both in Japan and international community. Mr. Yamai has a unique career development for a Japanese business person. He started to work for Bank of Japan after graduation from University of Tokyo, then turned to the private sector, first with Boston Consulting Company, then with MUFG. Mr. Yamai will talk about private sector views on Cbdc. Dr. Dohner, floor is yours.
Well, thank you very much. I want to express my thanks to the Sasakawa Peace Foundation and to Dr. Akimoto for the opportunity to take part in this discussion. It's also a pleasure to be here with Mr. Oishi and Mr. Yamai. As Dr. Akimoto mentioned, digitization and networking have changed much of our lives. It's hardly surprising that it's changed payment systems as well, with a rapid growth of online payments accelerated by the current pandemic. In addition, new forms of payment have developed for making purchases, for transferring funds, and ironically, we're now seeing the reintroduction of private currencies, something that had died out completely in the last century as central banks took control over currency issuance. The declining use of physical cash, notes and coins, in many countries and the growth of online payments has led to central bank interest in central bank digital currencies, or CBDC, an electronic version of central bank issued money that would be available to individuals and institutions to use in payments. Central bank digital currencies was largely a research topic for central banks. Many central banks were interested in it, but few thought that they would be introducing CBDCs anytime soon. That changed last year with Facebook's proposal to introduce its own currency, the Libra, and the prospect that Libra could rapidly scale up among Facebook's 2.7 billion active users. There are clear potential benefits for a central bank digital currency. The first is the provision of a safe, secure method of payment. The second is a faster, less costly, and more resilient payment systems, including for international payments. A possibility of greater inclusion of people who are currently outside the financial system, and also the possibility of more effective monetary policy. But there are also real risks as well. The first is the risk of disintermediation of the banking system. In other words, the displacement of banks from their traditional role of collecting deposits and making loans, and the possibility that credit would contract if a central bank currency were introduced. There's also the possibility of greater financial system instability and bank runs if depositors shift their funds to central bank money at signs of instability or uncertainty. And also there are reputational and operational risks for central banks in introducing central bank digital currencies. Providing account services to a far wider range of potential holders that might account to over 100 million in the United States. Central bank digital currencies are a deceptively simple idea, but there's significant challenges in their design and their implementation. There are significant technological challenges in design, particularly in designing a secure system, but the challenges are not simply technical. There are also difficult legal, institutional, and political challenges. To give you a sense of the legal challenges, as an example, who is responsible in the case of mistake or fraud? Can transactions be reversed? And if so, how? Is there a mechanism for dispute resolution? There are also difficult trade-offs involved. The first is how to strike the right balance between privacy and transparency. When should central banks make information available to law enforcement or tax authorities or other parts of the government? This is a particular problem in the United States, where Americans are often much more willing to trust their personal data to Google, Facebook, and Amazon than they are to the US government. As Dr. Akimoto mentioned, the United States is a relatively late entrant into central bank discussions of digital currencies, and its approach has been cautious. When Chair Powell was asked about the prospects for a Fed digital currency in October, his reply was, it's much more important to get it right than it is to be the first. Fed speeches, notably by Governor Brainerd, have emphasized the Federal Reserve's efforts to improve the existing payment system through the Fed Now initiative, a proposal for an instantaneous, always available, real-time settlement system. But the Fed has no plans currently to move forward with a policy proposal for consultation with stakeholders. There are reasons for US caution. The first is that the United States has an incumbent position that it would like to maintain. The US financial system US dollar transactions and payments are absolutely central to the global system. And this involves far more than the US dollar's reserve currency status. The vast majority of international payments and settlements involve US financial institutions or go through the US financial system. Each day, over $12 trillion of dollar payments and settlements transactions take place. In many ways, the current system is a clunky system. In some parts, it relies on technology developed 100 years ago for the telegraph. But the legal rules, the responsibilities, if things go wrong, are well established, well litigated, and understood by the participants. These are crucial matters for those making billion-dollar transactions. The United States gets substantial benefits from its incumbent position, and it relies on it for the effectiveness of the US financial sanctions. The implication of all of this is that the United States will work to improve the existing payment system and will follow closely research and efforts of other central banks. But it will not be the one to innovate itself out of its central position. It won't be the agent of its own disruption. There's a second reason for US caution, and that's the financial organization and legacy infrastructure in the United States and US domestic politics. The United States has a very large number of banks, over 10,000, large even for an economy of the US size. Japan, other countries have far more concentrated banking systems. Banks in the United States are a politically powerful lobby, particularly community banks, which were influential in drafting the Dodd-Frank legislation and the revisions to the legislation that took place afterwards. Credit card processing companies, money transfer companies are also important in the United States. Credit cards in particular have a very strong entrenched position. Merchants are expected to honor credit cards and they pay the transaction fees. And there are large incentives for users to use credit cards when making purchases. Incentives in the form of cash rebates, airline miles, other incentives. The result of all this is that there are big barriers to the scaling up of any other payment system in the United States. There's also both a political and an operational reluctance of the Federal Reserve to take over private sector activities like account maintenance and compliance. To illustrate this, the Federal Reserve System in total has 23,000 employees. Credit card processing and money transfer companies have 150,000 employees, over 6 times as many. And US banks have about 1.9 million employees. As a result, in the United States, if there is a central bank digital currency, it's very likely to be put in place on top of and working through existing US financial institutions and systems, with lots of interest to satisfy and lots of compromises that would have to be made. There are some factors pushing the United States towards a central bank digital currency. The threat of displacement, the erosion of currency use, and declining monetary policy effectiveness would all be triggers for the introduction of a Cbdc. In addition, the anti-competitive implications of having one or a few large tech companies dominating the payment system would be a very serious matter. The biggest threat would be from a platform company like Facebook or Amazon, where the existing user base would provide the vehicle for rapid scaling up, and where the value of data that would be collected by the platform companies on individuals' transactions and payments would be valuable enough to make it worthwhile to offer substantial incentives for potential users. A telling example of this is Alipay and WeChat in China, which together did $37 trillion of transactions in 2018. I think it's the rapid growth of these two online platforms that's much more influential in US thinking about central bank digital currencies than the PBOC's own digital central bank currency effort. A further incentive to consider a CBDC in the United States is financial inclusion. About 5.5% of US households, or over 7 million households, don't have a bank account. They cite high fees, overdraft charges, other obstacles to using bank accounts and credit cards as reasons for non-participation. This is part of the reason why the United States finds it difficult to provide disaster relief or economic stimulus payments, as we've seen in the last couple of years. The incoming Biden administration will emphasize creating a US economy and financial system that benefits Americans of all incomes. And it's likely to emphasize, among a variety of things, financial inclusion efforts, which may involve the encouragement of the introduction of a central bank digital currency. I want to say a few words about China, which is already piloting and quite likely to be the first major country to introduce a central bank digital currency. In China's case, called the Digital Currency Electronic Payment, or DCEP. China has conducted test runs in a number of cities, most recently in Shenzhen, with 47,000 customers participating and 3,400 shops. The aim in China is to have a nationwide rollout of the system in time for the 2022 Winter Olympics in Beijing. China's efforts are sometimes viewed, most recently by US Senator Tom Cotton, as a threat that the United States has to respond to. I'm much less concerned. First, the digital RMB is a domestic currency in a country that maintains strict capital controls. I think it's in large part an attempt to maintain control of the payment system and assure financial stability in response to efforts by Alipay, Tencent, and other fintech companies, and part of an effort to bring these companies into the regulatory net. There's no clear description yet of what a digital RMB would look like, but patent filings in China suggest a high degree of top-down control. I think that China is likely to proceed with limits on overall digital RMB issuance and individual account balance limits, which is similar to the way that they've proceeded when they've introduced other new financial sector options. If there's an exception to the domestic-only digital RMB, it may be in Africa, where Chinese firms and renminbi settlement and trade has rapidly increased in the past few years. Pre-installed digital wallets and Chinese-made cell phones could facilitate the use of RMB settlement, but it also creates potential problems with African countries, particularly those with unstable macroeconomic policy. There's the renminbi equivalent of the threat of dollarization, rush of domestic currency holders into renminbi assets in times of uncertainty or instability. But it also provides an interesting challenge to China if and when the capital inflows from the buildup of renminbi balances turn to capital outflows if users turn to other sources or other parking of funds. Finally, I want to talk about US-Japanese cooperation, which I think is extremely important and valuable. The Bank of Japan, like the Federal Reserve, is considering issuing a central bank digital currency. Japan has experience with cryptocurrencies, with distributed ledgers, and also with things that can go wrong with crypto exchanges, experience that would be valuable to all central banks in their CBDC efforts. But the most important area for cooperation is to ensure that central bank digital currencies, if they are developed, along with any other innovations in the payment system, are interoperable between Japan and the United States. The dollar, the euro, and the yen account for over 2/3 of international spot and other foreign exchange transactions. The renminbi isn't even close, below 3%, and far below the size of the Chinese economy and the global real economy. In addition, the network effects in payment systems are extremely strong. What this means is that there's little or no first mover advantage for China in its CBDC efforts. What the United States, Japan, and the EU decide, particularly if they decide together, will become the global standard. It's important that the United States, Japan, and the European Union work together to create global payment systems, possibly with central bank digital currencies that are safe, secure, efficient, and also interoperable. And with that, I'll stop here. Thank you.
Thank you very much, Dr. Dohner. Wide-ranging of explanation of CBDC, even touching on China, which is very important, obviously. So thank you very much. Minister Oishi, floor is yours.
Thank you, Dr. Akimoto. I'm going to use some presentation materials. Thank you very much. And I think I'm going to talk about the Japan's basically BOJ's and other ministries, including Ministry of Finance, the policies or stance on the CBDC. And I think some of them, a few part of them, a small part of them may overlap with what Dr. Dohner just presented. And I'd like to start off by taking a look at some Japan's major developments and efforts regarding CBDC over the past few years. That's on the first slide. And in 2016, the Bank of Japan started a joint project with the ECB, European Central Bank, to explore distributed ledger technology, which could be used for CBDC, especially so-called wholesale CBDC, which is used only between a central bank and financial institutions. There may have been unofficial internal studies about CBDC even before this joint project, but I believe this was the first collaboration related to CBDC involving partner authorities from separate jurisdictions. 2 years later, in 2018, BOJ set up a study group to discuss various legal issues related to CBDC. The next milestone was the G20 under Japan's presidency last year, 2019, where we set the digital payment issues as a priority area for the development agenda. The underlying idea of this decision was to harness potentials brought by technological innovation while properly addressing risks involved. And just before summer in 2019, Libra, one of the major global stablecoin program led by Facebook, Dr. Dohner just mentioned, Libra announced that it would become operational in the near future. Driven by concerns about stablecoins' significant risks to the stability of international financial and monetary system, Japan put the issue on the G20 agenda and achieved an agreement to monitor developments and remain vigilant to existing and emerging risks. In October 2019, G20 announced its consensus that no global stablecoins or other similar arrangements should commence operation until relevant risks are adequately addressed. This consensus is still valid now. In fact, G7 finance ministers and central bank governors just reaffirmed this consensus October this year. During the course of discussion on global stablecoins, there was growing attention towards digital currencies issued by the public sector, in other words, CBDCs. Japan then broadened the G20 agenda to include CBDCs and payment systems as a whole. The COVID-19 shocks, in particular, brought the public eye onto this issue. Now, discussion on global stablecoins issued by the private sector have relatively been muted, while CBDCs attract an increasing amount of attention. Returning to the timeline, in January of this year, 2020, 6 central banks, including BOJ, ECB, Bank of England, Bank of Canada, Riksbank from Sweden, and Swiss National Bank, and also the Central Bank of Central Banks, the Bank of International Settlement, BIS, set up a working group to discuss various issues regarding CBDC, with the Federal Reserve of the US also joining the group this past summer. This central bank working group published its first report in early October this year, 2020. I'll talk about the report a little bit on the next slide. As shown at the lower half of this slide, the report provides the fundamental principles and core features of the CBDC. I'll introduce them briefly. So the first fundamental first fundamental principle is do not harm to wider policy objectives. This means any CBDC should not interfere with the central bank's ability to carry out its mandate for monetary and financial stability. The second one is ensure coexistence and complementarity of the public and private forms of money. This ensures that CBDCs never replace cash or other private money like commercial bank accounts, but coexist with them. The last one is promote innovation and efficiency. This one states that continued innovation is important for a payment system because users may adopt less safe instruments if there is no innovation. The report also provides core features of a CBDC. I don't mention them one by one here, but the report listed up 14 features, such as CBDCs should be compatible with cash, or CBDCs should be as convenient as using cash while tapping with a debit credit card. Of course, the designs of CBDCs will vary to reflect the specific situation of each jurisdiction. But all CBDCs should meet these principles and core features to maximize their unique benefits while avoiding harm to monetary and financial stability. Returning to the timeline, concurrent with the publication of the Central Bank Group report October this year, BOJ also published its own policy on CBDC. This BOJ's policy is in line with what is said in the Central Bank Group report I just mentioned. I'll talk about the BOJ's policy in detail later, so I'll only touch on it briefly here. In the policy statement, BOJ mentions its plan to start experiments in early 2021. These experiments are divided into 3 phases. The first 2 phases are proof of concept phases, in which BOJ tests the financial feasibility of the core functions and features required for CBDC in a test environment. The last phase is a pilot program, but BOJ will only decide whether to move onto this last phase after the completion of the first 2 phases. At this stage, we cannot predict the end result of this experiment, but at the very least, it should provide data useful for navigating the rapid changes of the payment sphere. This sums up the major points of progress Japan has made in the field of CBDCs in the past few years. Many of these accomplishments come from BOJ. In addition, relevant ministries have made contributions of their own. For example, BOJ, Ministry of Finance and Financial Services Agency, set up a trilateral group at the high level, and they are holding periodic meetings to discuss issues related to CBDC in the context of international finance, financial intermediaries, and so on. Next, I would like to elaborate a bit on the G7 statement on digital payment released in mid-October this year. This statement clearly illustrates the reason why G7 governments are taking a closer look at CBDC to explore the opportunities and risks related to CBDC in the context of ensuring the safety and efficiency of the payment systems, financial stability, and the achievements of macroeconomic objectives. The statement also suggests an awareness of the risk of potentially harmful CBDCs. It mentions that confidence in the stability of domestic payment systems and the international monetary system is underpinned by credible and long-standing public sector commitments to transparency, the rule of law, and sound economic governance. In other words, that these factors are prerequisite for potential issuers of CBDCs. Of course, this can be also interpreted as a warning against any potential issuers who would not adhere to such tenets. As Finance Minister Aso said at the press conference after G7, it is likely an indirect question towards China and its plans for CBDCs. Building on this statement, G7 work could aim to establish a common understanding and possibly a CBDC principle. The report I published by 7 central banks and BIS I mentioned in the previous slide would be a good base for this movement. Now I would like to point out 5 key aspects BOJ provides in its strategy on CBDC, which was published in early October. The first point is that CBDC will coexist with cash, not replace it. As we all know, digitalization has been rapidly advancing in almost every corner of our life, including the payments sphere. However, in Japan, the amount of cash in circulation is about 120 trillion yen as of the end of October this year. This is equivalent to 22% of our nominal GDP last year, much higher than in many other jurisdictions. For example, the United States has an amount of cash in circulation reaching 8% of its own nominal GDP. There does not appear to be any singular reason for the preference of cash in Japan, but some factors may partially explain its popularity. For example, the low crime rate causes people to feel safer carrying around large amounts of physical money. Cash is also relatively easy to access in Japan. Not only can ATMs be found near banks, but in nearly any convenience store nationwide. In any case, cash is safe and convenient in Japan, and it is unlikely that this preference for cash will change in the near future. BOJ confirms that it will stay committed to supplying cash as long as there is public demand. In this sense, BOJ sees CBDC not as a substitute for cash, but as a complement to it. The second point is price and financial stability. BOJ states that careful consideration is required in designing CBDC to avoid undermining financial and monetary stability. For example, limits on the amount of CBDC issued or held will be an option to prevent the possible shift from private bank deposits to holding CBDC, or in other words, disintermediation. Disintermediation would also affect transmission channels of monetary policy. Therefore, it is very important to consider the fundamental requirements and economic design of CBDC carefully. The third point is that CBDC should be designed to promote innovation. BOJ made it clear that if it issues CBDC, a two-tiered system will be adopted. This means that BOJ would issue CBDC and people would manage it through a digital wallet via private banks or other intermediaries. This is the opposite idea to direct opposite idea to direct CBDC, where people have accounts directly connected to a central bank and manage CBDC without intermediaries. In the two-tiered system, the role of the central bank will be to provide a digital payment instrument with finality and to manage the overall framework, while the private sector will be responsible for providing interface with end users and innovating through their knowledge and technologies. This kind of cooperation and collaboration between BOJ and the private sector will be a key to success. The fourth point is about privacy and end user information. Anonymity is one of the features of cash. It is important to strike a balance between privacy protection and the requirement of AML-CFT. But more importantly, we should also consider who obtained and manage data, what kind of data is obtained, and under what conditions it is obtained. Data should be protected, but also used where appropriate. This is one of the most important motivations for platformers and will be so for financial industries. Financial institutions create values by producing and assessing information. Therefore, we should consider how and to what extent we can allow intermediaries to use data. The appropriate level of privacy and use of data is a fundamental question to be discussed widely in public. The last option is the importance of cross-border interoperability. Calls for more convenient and cheaper cross-border payments are on the rise recently, partly reflecting the progress of globalization and the emergence of global stablecoin initiatives. In this situation, discussions to enhance cross-border payments have progressed at the G20 and other forums. The decision of whether to issue a CBDC and in what form is up to each jurisdiction, but CBDC should improve efficiency and soundness of the payment system, not only domestically, but also for cross-border transactions, making cooperation once more a key to success internationally as well. Next slide. Before concluding my presentation, I also would like to briefly touch on China, as Dr. Dohner did, and its possible CBDC, the digital renminbi. Until recently, it seems the US did not appear to be overly concerned with the digital renminbi project. This was perhaps based on the assumption that cross-border use of the renminbi would never spread, even in the digital form, given its heavy regulations and capital controls, shadow financial markets, and high transaction costs, as Dr. Dohner also pointed out. Domestic use or limited cross-border use would not be considered an issue, as the hegemony of the US dollar would never be threatened. However, Japan thought slightly differently and communicated that view with the US authorities. Although the US dollar as a key currency or a dollar-based international monetary system was unlikely to waver in the near future, the digital renminbi should still be monitored with extra caution. First, it is true that renminbi is not attractive for international use from the market economic perspective. However, developing countries might have many non-financial motivations to use renminbi, such as grant or loan provision, geopolitical or technological dependence, or Belt Road initiatives related to strategic considerations. Expanding the renminbi's currency zone in the developing world is a serious matter to consider, particularly as it could weaken the effectiveness of sanctions that rely on dollar-based cross-border payment network. Another point is the fast mover advantage in developing CBDCs. Now, there is, I think, maybe a different view, but Setting the standards for scheme design and a technologically platform has plenty of strategic value and facilitates wider adoption globally. The US seems to have gradually changed its stance on the digital renminbi, thanks to the Fed's participation this summer in the joint study on CBDC by central banks of market economies. As I explained earlier, the October G7 statement marked the first milestone in our efforts to alert others to the risks of digital renminbi, underscoring the importance of the CBDC issuers' commitment to transparency, rule of law, and sound economic governance. Together with this issuer-side approach, it would be also important to raise risks awareness among potential users of digital renminbi, notably in Asia and Africa. Recognizing such risks could help them make more reasonable decisions, weighing small short-lived benefits against long-lasting costs. In light of today's discussion, I'd like to reiterate that the most important key to success is cooperation, not only between the public and private sectors, but also cooperation on an international scale, including between Japan and the US and Europe, as Dr. Dohner also mentioned. And discussions such as this forum will surely be meaningful for CBDC's future. I think this is it. That's it from me. Thank you. Thank you very much.
Thank you, Minister Oishi, for casting light on Japan's stance on CBDC, as well as US and China. I also like to especially thank you for immediately accepting a speaker role for this session. Oftentimes, it's not easy for Japanese public officials to speak in a public fora like this, but we appreciated your candidness in discussing this very important issue. So thank you very much. I would like to invite Mr. Yamai to present private sector views on CBDC, relationship between central bank and private sector banks in the new arena. Thank you.
Thank you very much, Akimoto-san. In addition to insightful and comprehensive perspectives of Dr. Dohner and Mr. Oishi, I'd like to add an alternative view from a private sector player in Japan. Of the two types of CBDCs, general purpose and wholesale, I focus on the general purpose CBDC today, as current discussions are focused on this. I would like to start from confirming essence of general purpose CBDC from a private sector perspective. First aspect of CBDC essence, a brand new public money product, which is central bank issued and digitized. Currently, cash is the only public money available to general public, while bank deposit and electronic money are the private money available to general public. Currently, private money dominates in scale. In Japan, cash outstanding is 100 trillion Japanese yen. Deposit outstanding is 1,300 trillion Japanese yen. And electronic money outstanding is 0.6 trillion Japanese yen. Second aspect of CBDC essence, potentiality, as in Aristotle term. General purpose CBDC is currently at the concept level. Its design and technology choice is wide open. Depending on the choice, it can serve varied purposes and can lead to varied consequences. These essence oblige us to ask the following question. Is this intended to be public money upgrade or private money replacement? The Bank of Japan says there are three reasons why they need to consider general purpose CBDC. Replacement of cash, interoperability among private monies, and innovation in payment. The first reason, the replacement of cash, clearly means CBDC's public money upgrade. But the second and third reasons may connote CBDC's private money replacement. This question leads us to many important questions. Of those questions, I am obliged to focus on 3 questions as a private sector perspective. First is a business case question. Second, innovation question. Third, disintermediation questions. The first, business case question. In Japan, this question is very tough to solve. Clear unmet needs or convincing use case for general purpose CBDC is yet to be found. Financial inclusion is almost complete. Bank accounts cover almost 100% of adult population. Zenginnet, equivalent of chips in Japan, already provides fast payment both for large and small transactions. Transformation of Zenginnet is underway to include non-bank fintech players into the payment system. Thus, it is currently hard to justify investment and cost to prepare 125 million individuals and 4 million businesses in Japan for full-scale general-purpose CBDC for now. However, as with all the technological and digital innovations, we might be able to find concrete use case in some way. Thus, a series of research and experiment is very, very important to solve the business case question. Second, innovation question. If designed general purpose CBDC would quench private sector innovations. In Japan, private sectors drive payment innovations as with other developed and emerging countries. Each person in Japan has more than 4 electronic money instruments, either in card or mobile. The market is vibrant with various non-bank payment players from retail, IT platforms, and mobile carriers. Banks are leading various digital initiatives and are collaborating with those non-bank fintech players. Issuance of general purpose CBDC may disrupt those innovations. Both public and private sectors need to have a constructive and careful dialogue on how to collaborate. Third, disintermediation question. General purpose CBDC may disrupt deposit. CBDC is safer than deposit while providing the same convenience. Thus, public money or CBDC may dominate money creation in an extreme case. An extreme case of public money domination is found in Sovereign Money Initiative in Switzerland in 2018. The initiative proposed to prohibit private sector money creation by requiring commercial banks to put 100% central bank reserve for demand deposit. Swiss government and Swiss National Bank opposed this, and the Swiss people rejected this initiative by 76 to 24 in referendum. Private money creation is critical as a basis for sound economic growth in ordinary times and resilient lifeline in times of stress. This point became clearly evident in Japan in current economic stress of COVID-19, with both large and small enterprises demanding liquidity from banks to bear decline in demand. As I described, general purpose CBDC is still a potentiality. Thus, there are many questions to be solved to make it well-designed and useful actuality. While conducting research and experiment, both public and private sectors need to have a series of constructive dialogues and discussion to develop a grand design of financial system. In this grand design development, cross-border dimension is truly critical. This would include principles and protocols to ensure interoperability among and exclude idiosyncrasy in global CBDCs. We expect US and Japan would play a pivotal role in these efforts. As a top financial institution in Japan, we will continue to contribute to those efforts going forward. And we expect government sector to collaborate with private sector and also lead the discussion in the global stage. Thank you very much.
Thank you very much, Mr. Yamai, for insightful presentation for private sector. I would like to now open the floor for a Q&A session. If I may, I'd like to make a prerogative of a moderator and ask a first question to two speakers representing public sector views, Minister Oishi and Dr. Dohner. Both of you pointed out the importance of U.S.-Japan cooperation on CBDC in general, as well as geopolitical, geoeconomic policy toward China. What are the major area of agreements and an area of areas that need more coordination, more discussion between Japan and the United States, specifically on CBDC as well as on China? With regard to China, I felt like I detected a slight difference in nuances of how to deal with China between Minister Oishi and Dr. Dohner. So if you could also present your view on that, I would appreciate it very much. So perhaps we'll start with Dr. Dohner.
Well, let me take the last question rather than the first question. I think Mr. Oishi is more in touch with current disagreements and unsettled areas in U.S.-Japan official discussions. I appreciated Minister Oishi's points on China. I think they're important. I guess I have 3 points to make. First, there's a tendency to view, particularly in the United States, particularly now, any action of China as a threatening action, something that needs to be responded to. I think it's important to identify what matters. The American phrase is pick your shots and take actions that are really important and likely to be successful. There are some difficulties, potential difficulties posed by the potential international use of the renminbi, something that would be facilitated by an official renminbi digital currency. I put them in 2 areas. The first is the potential risks to emerging markets and developing countries, particularly in the area of taking on additional risk, disintermediation risk, the risks of financial system runs are clearly identified. But in general, I think it's important to worry more about lock-in than it is to worry about use. If use expands, but there are alternatives, that's far less serious than if international countries are being locked into a particular renminbi settlement system. Here again, I think I'm focused more on and impressed more by the activities of platform companies, particularly Alibaba and Tencent, which have begun to expand in Asian countries, particularly in Southeast Asia. I think the challenges lie there more than they do in general expansion of renminbi use and settlement. It's hardly surprising that the renminbi would be used to a greater extent in international transactions, given the size of the Chinese economy and the importance of China in international trade. In fact, in the real sense, China is underrepresented in the international financial system. So I think it's important in responding to China to follow carefully what they're doing, which is clearly what the G7 and the central bank discussions are doing. And to the extent possible, make sure that there are alternatives, but also to take care not to respond aggressively to every action that China takes.
Thank you very much, Minister Oishi.
Yeah, thank you, Dr. Akimoto. As I explained or presented in my slides, I think there is a potential risk that, of course, the of the renminbi is gradually becoming. I don't think it in the near future or in foreseeable future that the renminbi is going to be a replacement or key currency of the US dollar, with of course the status of the key currency is not only based on that kind of enforceable usage of the specific currency, but also but on the manpower's sorry, the nation's national security power or some other factors, more important factors, including national security or the value of the common value or some like a democratic system. But I think China up to this point is officially saying that it's going to use basically domestically if it's introduced CBDC, and I think they are actually have concerns of the overuse of the Alipay or some other private sector digital currency. So instead of that, they are trying to replace that with the CBDC. And of course, China is a kind of a central government. Government is controlling economic system. So the design of China renminbi CBDC is, I think the PBOC is collecting all the information on the data regarding the usage of digital CBDC. So I think up to the usage is contained or limited in domestic area, I think it's going to be okay. But I think I have we have a kind of concern that there may be at some point that China is going to use only digital renminbi for its extending ODA, official development assistance loans or grants to emerging countries, especially Southeast Asia and Africa, and they only allow digital renminbi as a transaction currency. So in that case, that effectively or gradually, I think the usage ratio of renminbi internationally is going to rise, and the U.S. is now frequently using the financial sanctions based on the key currency of the U.S. dollar. But I think gradually that kind of more usage of digital renminbi becomes apparent. I think that could undermine the status or the power of key currency as a US dollar. That's it. Thank you.
Thank you very much. Dr. Dohner, do you have anything to quickly respond? Are you okay?
No, I think those are good points that Minister Oishi makes. We agree on the matter of whether the threat is imminent. I think neither one of us believes that it is. I think the potential collection of data. I guess the question is whether China is willing to pay the costs for creating a limited renminbi trading area and impose the basically the restrictions on outside dealing that would involve. I mean, I'm old enough to remember that this sounds a little bit like the Comic-Con system of Central and Eastern Europe from years ago. China's larger trading is likely to be more efficient, but it's always more efficient to have a global system with convertibility than it is to have a closed system based on a single currency.
Well, thank you very much. We have a question from Ambassador Kurt Tong on Libra. Ambassador Tong, go ahead.
Hi, good morning, everybody. Hello, Bob. I'm struck on the China question by some of the human rights implications of digital currency, both domestically within China on the data front, but also internationally. And I like Bob's reference to Comic-Con. Another possible reference is the company store, where employees, say, of a coal mine would be paid in pieces of paper that could only be used at the company store, and therefore the products were being controlled at the consumer end as well. And I hope that the developing countries keep an eye on that and don't get themselves into arrangements where they're locked into trading relationships based upon the form of payment that they receive in grant aid. The question actually, though, is about Libra, Facebook's currency. Are central banks going to allow private companies to create hard currency in the form of digital payments in a way that is different from how credit card companies do it or other or bank credits? I really don't. I just don't understand what Libra means and why the issuers of fiat currency would allow a private company to then start to generate their own version of cash. Can anyone help me with that?
So I can take a try at that. Libra issued two white papers, a white paper in 2019 and a heavily revised white paper in 2020. It was clear after the initial Libra proposal that there was extreme reluctance of authorities across the G7, across the major central banks, to countenance the initial proposal, particularly the proposal to create a mixed currency basket that would define what Libra is. It's far from clear. Libra came out with a revised proposal to create basically stable coins in individual currencies, a dollar Libra, a euro Libra, a yen Libra. It's far from clear whether this would satisfy regulatory authorities. And the problems are, frankly, Facebook, which has a difficult public relations problem currently. But it's also a problem that non-official stable coins aren't inherently stable. There's always a possibility of lack of confidence and runs, even if a stable coin is notionally fully backed by convertible currency. It's not clear that Libra will be allowed to proceed in major jurisdictions. If it does, it will almost certainly involve a large degree of regulation, transparency, as well as the pledging of capital against the Libra assets, not simply their parking in safe assets. I think Libra has done more to focus attention on central bank digital currencies. I think the chances of it actually going forward are relatively small.
Thank you. Does Mr. Yamai have any comment on this point?
Yeah, there's not much to add to Dr. Dohner's point, but my understanding is that the FSB clearly issued that the next 1 to 2 years, they're going to develop the global standard to regulate global stablecoin, like a mix of currencies. And maybe the single currency stablecoin is a restriction of each central bank, but basket of coin, digital stablecoin, global so-called global stablecoin will be jointly regulated by global regulators. So it takes time, maybe next 1 to 2 years, to clear those global, to develop those global regulation, and Libra or DM clear those regulations. So it will take time. But on the other hand, there are other stablecoin like Finality by the it is jointly developed by USB and MFG also. It's called a stable coin for the it's a stable coin version of the wholesale CBDC. The use is limited to interbank, and that is used for the clearing transaction across the global banks, and that's also being developed. But it is also taking time because of the guidance by the regulators. So we feel a little bit more tension toward stable coins, both for Libra and other kind of stable coins.
Thank you. Minister Oishi, do you have any comment on this question by Ambassador Tong?
Not much to add, but I think as Financial Stability Forum also reports that I think AML, CFT, that kind of risk control framework should be reserved, should be required. So I think that kind of course also I think that the usage of data privacy, data privacy issue, and AML, CFT issues should be addressed before the GSC. I think that that should not be a so easy hurdle for Libra or other stable coins. Thank you.
Thank you. Dr. Dohner pointed out U.S. leadership in international settlement system, as well as existing, not in a bad way, but the legacy banking financial system in the United States as an important element in considering introduction of CBDC. Japan also shared number 2 element. Japan has a fairly sophisticated, established existing banking, financial private banking and settlement systems. This is a question to Mr. Yamai, but also for Dr. Dohner and Minister Oishi. What are the coordination between private sector and government sector between Japan and the United States? You both pointed out the importance of coordination between the United States and Japan, but how do you involve private sector actors in this policy discussion? Because both countries has a fairly well-established legacy system in a neutral sense. Thank you.
It's a very, very tough question. And we have just started to have a discussion with Bank of Japan. And the first discussion was explanation of the policy paper for an hour. And that's it for now. And Bank of Japan and we agree that we should have more intense discussion going forward. And even though the experimentation involving private sector is in 2021 or 2022, but we don't have so much time actually, because Bank of Japan need to do a POC 2 times before that. And we need to identify very clear and convincing use case. satisfying both the private needs and also policy objectives. And personally, I think that we need to have a joint discussion involving relevant governmental sector and also key private players, including banks and fintech players, credit card players, retailers, IT platforms possibly, and but banks need to play a pivotal role in this discussion. And key issue would be what is a specific use case to be experimented going forward, and that's a very tough question. And we need to think very deeply and broadly about what are the objectives and what are the use case and how to test it.
Pushing digitalization is a big part of Prime Minister Suga's policy. Is CBDC part of this discussion?
Yeah, to my understanding, it's not yet the part of the discussion, especially around the digital transformation agency, Digital Cho in Japanese. That is not on agenda, and the CBDC is on the agenda by the cashless and digital currency yet, but possibly the movement of digital may involve this digital currency. And again, the key point is what are the specific use case to be discussed. What kind of problem we should solve with the CBDC, domestically or globally. And potentially after hearing this discussion, potentially global or cross-border transaction could be a good use case, but we need to have a deep discussion.
Thank you. Before I ask each panelist for a few final words, I just like to invite Dr. Dohner and Minister Oishi to cast a light on involvement of private sector in the US-Japan discourse on CBDC.
There are forums for interchange of views among Japanese and US corporate executives. I think the primary way in which the private sector is involved is in government corporate consultations, which take place a little bit differently in Japan than they do in the United States. In Japan, I think there's often study groups established where they explore issues, how the government might proceed before a policy proposal is issued. In the United States, it tends to start with a policy proposal and request for comments by corporations. In the United States, both American companies and foreign companies, including Japanese companies, comment on financial sector proposals. I think the same is true in Japan. Mr. Yamai raises a difficult issue. If there are disputes about fundamental things like use cases, it may be more difficult to bring about productive private sector government consultations than if there's a sort of general agreement on the desirability of the proposal in broad terms, but the disagreements are how to bring it about.
Great. Minister Oishi, on this particular question?
Yeah, I think as Dr. Dohner pointed out, that I think in the case of Japan, that the way of approach is slightly different. I think in the case of Japan, I think as Mr. Yamai pointed out, that the Bank of Japan and the private sector financial intermediaries, I think at this point maybe major banks involved. And starting that point, and of course, and I think I also agree to what Mr. Yamai pointed out, that use case or how to identify use case is very important. And at this point, that the Bank of Japan is considering, if it is employed, it's considering a two-tier system. That means that financial intermediaries or the banks are playing critical roles to distribute CBDCs. And I think, but on the other hand, the banks have deposit and deposit and compatibility of CBDC and deposits is, I think, should be carefully considered because I think it affects the financial intermediation of the central bank or financial intermediation of banks quite significantly. So even in only domestically, I think that point should be discussed between the central bank and the financial institutions. Of course, and also I think that issue of data privacy issue, I think that issue should be also discussed, not only between the BOJ and the private sector, but also the government sector. Thank you.
Thank you very much. We have passed the time and we must conclude the event. I have one outstanding question, but now we're going to deal with that separately after the event. I just wanted to invite three speakers for a final few words in order of Mr. Yamai, Dr. Dohner, and Minister Oishi before we conclude the event. Mr. Yamai.
Thank you very much. This event has been very great honor and very helpful to me because when the report of CBDC published, we are a little bit surprised because it is mainly on general purpose, not the wholesale. And we started to explore what's going to happen. And this event gives me a great perspective from Dr. Dohner and Mr. Oishi, very comprehensive and governmental perspective. That's very helpful. And think about the future of finance, potentially created by CBDC. And we are more than willing to cooperate. And also we need to contribute to build a future going forward. And thank you very much.
Well, thank you very much for participating from Tokyo. It's past midnight and I really appreciate it. Dr. Dohner?
Yeah, I'd just like to echo the remarks that Mr. Yamai made. This has been a very valuable discussion. It's clear that central bank digital currencies, but more fundamentally, changes in computer technology and networking raise a very wide range of issues of international dependence, competitive issues, data privacy issues, anti-money laundering issues, financial stability issues, and the effectiveness of monetary policy. Central bank digital currencies won't be the solution, nor will it be the cause of all disruption. It may be a contributor in either or both of those aspects. I think it's clear that there'll be a lot of attention, continuing attention in the future on this matter. And probably the case that central banks in Japan, in the United States, and elsewhere will go forward very cautiously as they introduce central bank digital currencies.
Thank you very much. Minister Oishi.
Thank you, Dr. Akimoto. I think I'm also thankful to this participating in this discussion, and I learned a lot from the discussion, and I think, but I think this is the area where this G7, at least G7 central banks and finance ministers are focusing on in terms of the financial intermediation, cross-border financial payment system, and in terms of the geopolitical sphere. So I think this event was very, very timely, and I was so honored to be part of it, and I look forward to participate cooperation of the government sector between the United States and also the cooperation between the public sector and the private sector on this issue. Thank you.
Thank you very much. I was very delighted to have this discussion, and Sasakawa Peace Foundation can be a positive element in discourse between Japan and the United States on the various issues. And looks like we need to have a CBDC discussion panel number 2 sometime down the road. So we're looking forward to it. Your time is very precious, and participants' time is very precious. And thank you very much for joining us for this wonderful event. I know you have many choices in town, and we really appreciate it joining us. So thank you very much, and have a good day. Bye-bye.